In India, we have a lot of love for gold. In fact, our country private holding of gold is the highest. So today we'll talk about the tax twist that happens when you actually buy gold, sell gold, or exchange gold. Welcome back to Tax Talk by TNC Sridhar. I am TNC Sridhar to guide you on how to deal with situations when you go to buy, sell, or exchange gold. In the previous episode, we saw about the taxation effect of the buying of coffee, or we talked about the digital payments. And today we'll talk about the gold, how exactly the financial things work behind that. Gold is a time tested asset. So, what happens when people buy gold? Over a period, it has come through generations because it doesn't get destroyed. So, it keeps on coming through generations. But when it comes to the question of taxability, there are two kinds of taxes. One incidence of taxes is when you buy gold. When you buy, you'll end up in paying the GST at 3%, and the making charges is there. Further on that also you will pay some GST. But when you sell, you are also liable to pay the income tax, capital gain tax. Because the cost at the time you acquire that gold and the cost at the time you sell that gold, the difference becomes your profit. Of course, subject to indexation under the Income Tax Act, and it will be liable to tax. When you go to exchange means what? You are buying a new jewellery and then you are giving in return old jewellery. In other words, you are selling your old jewellery and you are buying your new jewellery. So in the selling of the jewellery, you will be subject to income tax, and in buying of the jewellery, you will be subject to GST. In either way, the thing gets taxed. Sometimes what you do, you convert. Because general habit nowadays of the people is that they want to be in trendy with the latest fashion. So they keep on changing their jewelry from one to another. So they have to, when you give at that point and convert it again. Again, it can be treated as you are selling the old jewelry and buying the jewelry. It can work out, and this tax structure will work out. Now, to be on safe side, always it is better to have a list of the jewelry that you have, and whenever you do any exchange or you make a conversion, it is to have those bills ready with you so that they are tagged together and kept. If possible, take a photograph of the old jewelry and have the photograph of the new jewelry and have these things kept in a file so that any query comes at a later point of time, you are in a position to substantiate your answer with examples. Now, coming to the income tax aspect of selling or exchanging of gold. Under the Income Tax Act, the selling and exchange of gold, etc., are dealt with under the head capital gains. And there are two types of capital gains. One is called short-term capital gain, one is called long-term capital gain. And the rate of tax in respect of both are different. The short-term capital gain comes when you hold the jewelry for a period less than the threshold limit. In that case, it is taxed at normal rate as taxed with other incomes. Other than capital gain, at whatever rate they are applied, that will be applied on that. It could be depending upon your overall tax limit, either you are in a 10% bracket or 20% bracket or in a 30% bracket. Now, when you come to the long-term capital gain, when you are holding the gold for more than a threshold period, suppose the threshold period is 2 years, you are holding it for more than 2 years, then it will go under the long-term capital gain. While in long-term capital gain, again, there are two areas. One, a regime in which you are entitled for an indexation effect. That is, if the jewelry is purchased 5 years back, what was the value of rupee at that point of time? And what is the value of rupee today? Because of the inflation rate, there is some fluctuation. These inflation rates are being compensated by way of an indexation. So accordingly, since the value of rupee is gone down, so the base rate is increased and accordingly you are liable to pay the tax on the gain that you have got. For example, if you have taken a gold for 10 lakhs of rupees 5 years back and today you are going to sell it for 20 lakhs. But because of the indexation, the value of 10 lakh itself is to be considered to be 12 lakhs. The remaining will be taxed only on the remaining 8 lakhs, not on total 10 lakhs. This is one. Now, another regime in this is that there is no indexation benefit. So, without indexation benefit, you are charged long-term capital gain at 12.5%. But with indexation benefit, you will be charged at 20%. This all will work, which way you have to apply and all will all depend upon the exact facts and circumstances of the case. Whenever you sell gold of more than 10 lakhs, the purchaser, before giving you the money, he will retain 1% of his as TDS and pay that money on your behalf to the government treasury and give you a certificate which you can take credit at the time of filing your returns. In other words, if you have sold gold jewellery to the extent of 10 lakhs of rupees, 1% of 10 lakhs is 10,000 rupees. So he will give you 9,90,000 rupees and then he will give you a certificate of 10,000 rupees to you. And the 10,000 rupees he will credit it into the government account on your behalf and intimate accordingly. So what you have to do while filing your return, if you got a tax liability of say 50,000 rupees, 10,000 has already been paid by way of TDS. You can take credit of that and pay only the remaining 40,000 rupees to the government. This is what is the net effect of TDS. Now coming to the income tax aspect of selling or exchanging of gold. Common mistakes that people do is that when they sell gold or exchange gold, either they don't take the bills or having taken the bills, they don't preserve it. So when they do like this, they expose themselves to peril at a future point of time. So whenever you sell gold, you should take a thing, or sometime in that billing itself you will write, old gold purchase this much, that amount will be there. Then you have to report this. In the next return that you are filing, in that you have to say, this much gold I have sold and this has been my capital gain on this, and accordingly you have to show. It can be a plus, it can be minus, depending upon the situation. And people confuse between GST and income tax. GST is when you are spending to purchase gold, not while selling. While purchasing, that means you are expending from your disposable money on which you pay the GST, indirect tax. While selling, you are the beneficiary, you are getting gain. So you are subject to tax under the Income Tax Act. So this is how these two things are, which should not be confused. That should be clear in your mind. Of late, the concepts have come like digital gold, not physical gold. Now you want to buy gold, you used to go to a jewellery shop and you buy gold. But now it's not necessary. It's a paper gold. You just make an entry. ETF gold they call it, which is traded in stock market and all. Without having any gold or without buying any gold, you can just do that. In fact, many people do on that and they work on speculation also. That's a separate chapter by itself. That is, on a particular day, they make a contract that they will sell this much gold. And the purchaser agrees to buy that much gold. And on the settlement date, when actually the gold is to be handed over and taken over, it is not done. They say whatever is the rate was on the date of settlement, the difference is settled. For example, if the gold on a particular day is 90,000 per 10 grams, so one person agrees to sell gold, 1 kilo of gold on that day, and the other fellow is ready to buy 1 kilo of gold that day. Now what about the settlement day? The price of that gold becomes 95,000. So the purchaser who had agreed to buy this for 90,000 rupees will demand, okay, I'll pay you 90,000, give me the gold. No, he doesn't have the gold to give. So if you goes to market to purchase the gold and then give him, he has to purchase at 95,000 rupees and give it to 90,000 rupees worth. He's undergoing a loss. So to avoid blocking of that 90,000 rupees, he would say, okay, Baba, we'll do like this. Whatever the difference, that 5,000 rupees I will pay and let us close this deal. So they'll close. This is what is without actual getting into a physical transaction that goes. But unfortunately, this leads to artificial inflation and creating artificial demand of gold and accordingly artificially increasing the value of gold. These all are in a different mechanics that perform. Okay, but what as a common man, what you have to do is that it is safer to go for digital so that you can buy that. Many jewelers are also operating this, giving this facility also, but they have a scheme. They will say, you don't have to buy gold, you just pay me this much money, I will buy gold as on the date and credit it in your account. Then on the day you want to purchase, I will give you credit for it at the value of the gold as on the date of your purchase. So the jeweler operates because he can sell his gold at any point of time, his money is not going anywhere. You cannot go to open market and sell that I have got so much of gold lying with this jewelry, I am selling it. No. But if you are going to buy digital gold through of a bank and all those things, then you should be able to take care of ETF. When you are buying through ETF, you are buying, then you can definitely sell it in the market open like any other commodity. Every piece of gold has an emotional attachment. It could be a earring given by a husband to his wife at the time of her birthday, or remembering the day on which they met first, or it could be given on the date of marriage, or a date which is a milestone date of their career. They will mark it by buying a piece of gold. So this piece of gold are not just a piece of mineral. There are a lot of attachment to that. But taxation is reality. So now that we have seen the gold as an asset, what happens, what is the taxation effect that happens when all these things. Now in the next episode, we'll talk about the other assets other than gold when they are bought, sold or rented. Please like, share and subscribe for my channel. Let's make the finance a simple affair without unnecessarily making it complicated. So see you at my next episode. Thank you. In case you have any query on the gold, please put a comment so that it will help me to enable you to enrich you on this subject. Thank you.